all set up for you.
Thank you so much. So I don't have any fancy jokes again like Matt had yesterday. I still can't get over that gummy bear joke. Still laughing about it. So I'll introduce myself. I can't remember if I formally did that yesterday or not. My name is Bob Reynolds, and I am the Local Government Division Director for the Auditor of State's Office. I started back with AOS back last December. My real first day was the first Monday after Thanksgiving. And I'll have a little section here where I kind of introduce myself and go over all of my different facts and parts of my life. One thing I did want to point out is I noticed once I got here, did a poor job of reviewing the agenda when Lori asked me to. We were down for an hour and a half. I am not going to take an hour and a half. So you're going to get out for lunch just a little bit early. I'm going to let... We could do legislation. When you started doing it really fast, I thought about stopping you saying, you can do that. You can jump in at the end. Funny story was Courtney was joking when she said an hour and a half, and she was laughing. She's back there. And you took her serious and actually put us down for an hour and a half. Something about the accountants. We don't know how to joke. So we'll get started. No, none at all. So another thing I want to point out, when I put together these slides, I had this picture where I was going to have a screen behind me and I could point to a screen. Then I got here and I found out that idea doesn't work. So we'll see how a few of my slides work. But so we are the Local Government Division of the Auditor of State's Office. A lot of you know us as the Settlements Department, which I guess forever that's what it was. I never knew as that I came in as Local Government Division. But so if you think of us, we were the Settlement Division. We're a team of two. You have me, and what I've learned is Janie is a rock star. You guys all love her. She gets applauses. Every time I turn a corner, she's talking to somebody. And she's not just talking to somebody, she's best friends with them, hugging them and knowing them and talking to them. I'm like, how do you know this many people? I know like 5 names. And she knows everyone by name, face. I'm impressed. I hope I can just get halfway there at some point. So we kind of have 3 main items that I want to go over today. I know this is supposed to be settlement, but there's no updates to settlement, so it would be really quick if we only talked about settlement. So I kind of wanted to bring in a few other items that I picked up on that I think can help people if we can just kind of have a short discussion on it. The first item we're going to talk about is I want to talk about the property tax relief workbook, specifically the allocation of your credit. This was a change that happened back in 2017 when we changed from the old system to this new LIT system, or local income tax system. I'm learning that the state likes to abbreviate. But anyways, a big question we kept receiving from people is, what is our allocation? How do I know what my allocation? How do I get there? So I kind of want to just do a short walk through the process. Everything we talk about today, I'm going to try to keep it really high level. I'm going to try to kind of stay out of the weeds. A bigger setting like this, I always think higher level's better, and then you can come talk to us if you want to talk about some more detail and more kind of items in the weeds. The second place where just the past couple of weeks, I've been receiving a lot of questions on your circuit breaker adjusted rates. I wanted to do a short walkthrough on why you receive those, what those are, and how you get to the calculation. I'm not going to do the calculation because that's some high-level algebra, and I don't have my algebra book, and I don't think I still fully understand it because I didn't pay attention in algebra class. The final section we're going to talk about is I'm just going to do a quick walkthrough of all the settlement forms. Not going to take you line by line. We have a settlement guide out there. Like I said, there's no changes. I don't think it's in anyone's best interest to really have me walk you through each line. You've seen them before. You've been there before. If you have any specific questions, yet again, we're here. You can come ask us. So with that, I was told my predecessor, Dan Bastian, liked to talk about himself and his family before he went into any presentation. So I'm going to follow that legacy and kind of do the same thing. My first thing I just want to talk about is just kind of about who I am, because a lot of you guys don't know me, and you don't know me before I came to the Auditor of State's office. So I'm a Ball State graduate, graduated in 2008. Go Cards. I get chirp, chirp. I guess our new slogan is "We fly." Between us, I don't like that, but we fly. I am a certified public accountant, and before coming here, I was a registered municipal advisor. I had passed the Series 50, went through all of the new standards that were in place, but I believe now, since I'm not with a municipal advisory firm, I'm no longer technically a practicing MA. Before here, I had one job. I was with London Witty Group for about 8.5, 9 years, somewhere in that ballpark. If you count my internship, I think I get up to 9.5. I tell people 10, I like to round up. Sounds better. They're actually now known as LWG CPAs and Advisors. They rebranded their name back last year. But my term there, for the first couple of years, I was a staff accountant. I was just doing your prototypical audits and so forth. Then, after doing that for a couple of years, I moved into their municipal advisory or financial advisory part of the firm. I became a senior staff accountant. I was working directly for, a lot of you here may know them, Jim Higgins and Bob Swintz. That's where I kind of started learning the rules of the trade, learning a lot about budgets, TIFs, issuing bonds. Really, issuing bonds was kind of my main, working as FA was my main side. Then for my final couple years, I was a manager of governmental services where I was really working directly with a lot of counties, really cities, towns, school corporations on debt issuances, and just pretty much any financial need that came up. So that is my professional history. Now I want to do the Dan Bastion and walk into my family. I don't have grandkids, but I do have a wife. We were married on June 11, 2016. This picture here was our vacation last summer. We were in Yosemite National Park in California. If you ever get a chance, I highly recommend going. It was absolutely beautiful. This picture here took place after I had the great idea. It was our first day there. I was like, let's take it easy. This hike over here looks like a great hike. It's a short 3-miler. It should be easy. Being the smart husband I am, I didn't research the actual hike. It was a straight-up hike, kickbacks back and forth, and I was falling over. That's why I'm not in the picture. My wife, on the other hand, she's feeling great. Still don't understand how I got her to marry me. That's a whole other conversation. Tricked her into it somehow. We don't have any kids, but we do have 2 pets. I have the Fenway puppy. Here, she was very festive. She's a boxer, bulldog, something like that mix. I don't really know. About 6 years old. She's goofy, and she likes Christmas. And I adopted, or married into, a cat. The cat hates me. We have a hierarchy in our house. It goes the cat, the wife, the dog, me. That's how the cat sees us. Every once in a while, she likes me, she thinks about it, and she quickly bites me and runs away. So I thought I should talk about what kind of hobbies I like and what I'm into. And before, being MA, I worked a lot. I was traveling a lot going around the state, so I didn't really do much. I kind of got into running. I was told that's a hobby. I didn't really think. I think it's torture. But I ran the half marathon, the Indy Mini, just a few weeks ago. So I'm proud of this. Then I started seeing other people's times. I learned it's kind of average to below average. But I completed it in 2 hours and 10 minutes. Being the accountant that I am, I wanted to know what my hourly pace was. It's 9 minutes and 57 seconds. So I beat the 10-minute threshold. That was my goal. Then I looked at my place. I finished 6,408th. But I finished. So that's me, and now we got to actually talk about boring work stuff. So we'll get into the actual meat and bones of the presentation. So the first part that I wanted to talk about is property tax relief. So first, I just wanted to kind of dive in and go over the basics. As I quickly learned with the state, we call them, I always call them categories, but here at the state, at the Iowa State's office, we call them buckets. So there are 5 different buckets that your property tax relief credits can go into. By buckets are going into, that means your allocation of your total credit can be divided into these different categories or buckets. So if you have $1 million, you can break that up into any bucket or any allocation that you want so the different taxpayers in your county can receive this allocation credit. The first credit or first bucket that you can receive is your total AV, and it's about exactly what it sounds. You can give it equally to all taxpayers. The second bucket, or the next 3 buckets, is kind of broken into, think of your circuit breaker categories, your 1, 2, and 3%. You can break it and divide it equally into each one of those percentages. So if you want to do, let's say you want 50 out of your, let's say you have $1 million credit total. You want to put half of that to all taxpayers. You can do 50% to all taxpayers, and then another 50% of it, or 500,000 to your 1%, or vice versa, any other way you decide to break it down. The final category that there is, so I said 5, 5's right, sorry, is what's called residential property. What this is, in a nutshell, is just think of your non-homestead residential, so your rental properties or your homeowners who have multiple homes and it does not qualify as a homestead. You can allocate some of your property tax relief credit to this residential property. The reason this exists instead of just the 2%, because the 2% goes beyond and above just residential types. It also includes your agricultural and so forth. So this is a way, if you want to keep it with your residential, but you want to hit all of your residential property, you can divide it between your 1% and residential. The final category that I include here, by all definitions, does not exist under the new statute. However, by the way the old income tax system was grandfathered in, some of you people had, some counties, not you people, sorry, had what's called qualified residential property. What this was, it was a split between the old form of 1% and residential property. And what happened, and the way we treat counties that had this property, based on the proportionate share of calculated taxes, we divided or allocated between the two types of property. I'll get into that a little bit more in a couple slides, but I just wanted to point out that that is still out there for a few counties. And this slide here, sorry, I'm not even paying attention to my slides. It's kind of just walking through what I was just discussing. It's just talking about how we allocate the qualified residential property. And actually, if we go back here one step, these last 2 bullet points kind of walks through our calculation and shows how we allocate the counties that did have qualified residential property, how we allocate what they had to 1% and to residential property. We do that every year instead of just assigning a percentage between the two, because if you had qualified residential property, that would have adjusted from year to year as your AVs and property owners change. So the reason we do it like this is to try to maintain the same structure or the same amount of credits that were allocated as before. So the next slide, I went back, not forward. The next slide, this is just a picture from your property tax relief workbook. One of the first things I think that would be extremely important for every county to do when they receive this the workbook from us, if you look at that first column where it says percent applied, that column is where we believe, from the information we received, where your percentages are currently allocated. We believe we're correct. We've looked through all the information that's been provided. We've looked through the resolutions. In the pre-abstract survey, we ask you to verify and tell us what the breakdown is. But as a last level of control and check, I cannot express how important I think it would be for every county to take a look at that and make sure you agree with that percentage. I'm going to come back in a little bit and talk about the impacts if this percentage is incorrect. But the next slide, I'm going to skip the next slide and go 2 forward. I want to talk about how do you know what your allocation is? Because that was one of the biggest questions I kept getting is, I know I have property tax relief, but I don't know exactly what my allocation is. It's new, so a lot of counties may not quite know what to check or where to look. The biggest question that came up was because of the way the allocations were created. It wasn't created for a lot of counties just by a resolution being adopted. It was created by the Auditor of State's office taking your prior property tax relief rates and using a system to assign a percentage based off of your total percentage. So we looked at your total your property tax relief type that you had prior to the system. We took a percentage or an allocation and we created our percentages from that. I'll go into that a little bit more on my next slide. But another good way to know your property tax relief allocation percentage is if you've adopted a resolution since 2017, it should be stated in your resolution. So you should be able to go directly to the resolution that your local income tax council or your county council, if you were a former, I believe it was Coet County, adopted, and you should be able to see that rate. The other good way to check is to check your property tax relief workbook from last year. The one issue that could come up from only looking at your property tax relief workbook was if it was incorrect, it would continue to be incorrect, but at least it's consistent. At least you don't have a certain property taxes going up or down. You're at least being consistent. But for that reason is why I strongly suggest, if you do not have a resolution that was adopted, if you're still going off of what we assign, to have your council adopt a resolution so you do have a stated document where you can easily go back to and say, this is what our council adopted, this is what we say it is. It's just easier when this question comes up and you have this allocation, you don't have to go through this complicated structure of allocating, that you can say, the council assigned this and this is what we believed. So when I got ahead of myself a few minutes ago, this is what I was referring to. So if you look at the chart, and you see the couple different property income tax types, we allocated or assigned the allocation bucket based on your former credit type. So for example, if you're a low at PTRC County, that property tax relief income tax was good for total AV. So we assigned that to total AV. So for example, if you had a 75% local income, low at PTRC, and a 25% low at HSC, we assign 75% of your credit to total AV, 25% of the credit to 1% AV, and so forth. If you have any questions about your county specific allocations and how it's being assigned, please feel free to come talk to me, talk to Janie. We're going to be back there in the back left corner. Talk to me today. Give me a call when you get back to the office. I'm happy to talk to you, happy to help you, and answer any questions that you may have on property tax relief. Now I kind of want to go back 2 slides, because when I was kind of reviewing this morning, I figured the better flow would be to talk about how you know your allocation. Now let's talk about what is the main impacts if your allocation is incorrect or isn't what you thought it was going to be. The first thing I want to point out is there is no impact on the actual amount of credit that is going to be allocated if your percentages are wrong. At the end of the day, if you collected and certified $1 million of property tax relief credit, no matter how you allocate amongst the buckets, you're still going to disperse $1 million. The impact, though, is, for example, if you were expecting to have 75% of the credit go to 1% property and you end up only having 50%, you're going to understate the amount of bill or property tax relief that goes to your 1% property taxpayers and overstate the amount that it goes to, let's say if it goes to the 2%. The issue that ends up happening is you're going to have a lot of residential homeowners or homestead homeowners come back and saying, wow, my property taxes went up, and they're not going to be happy. So that's why it's important to pay attention and know and see. So with that, that's everything I wanted to talk about when it comes down to property tax relief. Go forward. The next item that I want to talk about is circuit breaker, your circuit breaker adjusted rates. This is something that every county receives once a year after your abstracts are completed. One thing that I want to mention about your circuit breaker adjusted rates, it only has to do with the apportionment of funds. It has nothing to do with the actual rates that go on tax bills or the actual rates that taxpayers pay. The rates the taxpayer pays will always be the certified rates. These rates are rates that are adjusted due to laws that were passed and statute that was created due to funds that are either protected from circuit breaker loss or that are 100% exempt from circuit breaker loss. Funds that are protected from circuit breaker loss, they only receive circuit breaker once all other funds have been extinguished. So think of kind of a hierarchy. If you're a school corporation and you have a debt service fund out there that is a debt protected fund, that debt service fund will only receive circuit breaker loss if your other 3 or 4 funds out there have received all circuit breaker and have no funds remaining. Then loss will be assigned to your debt service rate. This is to help protect debt service to allow counties or school corporations to pay their bonds that are outstanding and pay their debt service. One important thing about protected funds, your certified rate to your apportionment rate will not change. It will always stay the same. There will be no adjustment up to your actual overall rate. It's just the the increment of rates to come to the whole rate. So you may, and we'll go into that a little bit in the next slide. The other item is there are funds that are 100% exempt from circuit breaker loss. These primarily throughout the state are your post-09 referendum funds. Your post-09 referendum funds, as everyone knows, is outside the circuit breaker. Since it's outside the circuit breaker, there is instances where you may need to actually increase the rate that's apportioned for those funds, and it would increase your overall apportionment rate as compared to your certified rate. This is, in the next couple slides, I'll kind of walk through a situation and show you how that kind of works. So the first kind of example that I want to show is a protected fund example. The example that I have here, I'm not going to get into the math, because the math, I could have a whole class of just going through the math on how the algebra is done to calculate protected and exempt apportionment rates. What I just want to go through here is show you how we come up with the rate, or how the rate impacts versus your normal certified rate. So you'll see here with this school corporation that you initially had a tax rate of $1.44. But, however, you'll see the school, you have this kind of column right here. We have NP for non-protected and protected funds. The school corporation has a protected fund rate of about 37 cents. However, in the school corporation, they have circuit breaker loss. Because there's circuit breaker loss within these school corporation funds, that circuit breaker loss needs to be adjusted so it stays with the non-protected funds. Because of that, when you think of the proportionate share of the taxes, we increase the proportionate share that's going to go to the school, but decrease the proportionate share that goes to the non-protected fund. So instead of receiving, I'm not going to do the math, but I'm just going to use the round numbers. Let's say they're receiving 37% of the protected funds, but you have $100,000 of circuit breaker loss. You're going to now receive an increased proportionate share of the collected taxes, because instead of collecting the $1 million taxes, due to the $100,000 circuit breaker loss, you're only going to collect $900,000 of the taxes. So the proportionate share of those taxes allocated to the school is going to be a little bit higher. I'm guessing that's about clear as mud. But the end of the day, the long story, the thing to remember is, when we talk about protected funds and circuit breaker loss, it's all about the proportionate share of the total taxes. Since the fund does not receive circuit breaker loss, after circuit breaker loss occurs, their proportionate share increases, so circuit breaker loss does not go to that fund, and the proportionate share for the other funds decreases. So now we go to a little bit more complicated referendum or exempt funds. This is where I thought I would have the screen behind me and I could start pointing to numbers. And then when I got here, I realized I can't do that. So I'm pointing to the screen, but you guys can't see exactly what I'm pointing to. So talking about exempt funds, I have a scenario here where we assume there's $1 million of collections and $200,000 of circuit breaker loss. So if you look at the certified rate column, the far left column, we have a total tax rate and the proportionate share of taxes based on the total tax rate. So you'll see for the exempt fund, they're receiving about 6.19% of the taxes, and the non-exempt funds are supposed to receive 93.81% of the taxes. But the issue is, when we create these certified rates, we don't take into account circuit breaker loss. So everyone knows in a real-world scenario, you're really not going to receive the full $61,000 and $938,000 or full $1 million of collection, because there is circuit breaker loss. So what happens when we go through the long list of algebraic equations, we come up with a scenario that adjusts up our exempt proportional share to 7%, and we adjust down the non-exempt proportional share to 92% to make up for that circuit breaker loss, and then assign 100% of that loss to the non-exempt funds or the non-referendum funds. So you'll see by making those changes or those adjustments, the exempt fund taxes holds at that $61,000, because that fund cannot absorb circuit breaker loss. By law, by voter referendum, they had the taxing district has decided, or the school corporation, the taxpayers have decided they do not want circuit breaker loss assigned to that. So you have to decrease the amount of the non-exempt funds. So this is high level example, that is what you're seeing. So when you receive your circuit breaker rates, when you receive that file that has your certified rate and an increased circuit breaker adjusted rate, that's why the rate's going up. It's not going up because we think more taxes are coming in. It's going up because we are adjusting the apportionment share, proportional share that is assigned to those funds. So that is the high-level circuit breaker discussion. The next thing I would like to kind of get into or discuss is the reason everyone's here to listen to me talk is your June settlement. The first main item I want to point out for June settlement is that, as I stated earlier, there are no major changes. So that's great. Your forms that you received are the same forms you received in last year. There's no real changes to the forms. So I believe everyone here should be pretty somewhat familiar with the forms. You only see them twice a year, so I'm sure every time you pick them up, it's kind of like, wait, what was I looking at? Why did I do that? But at least there were no changes. The one thing I want to recommend to everyone here is before you work on your settlement is to read the June 2018 manual. The manual is a very detailed step-by-step process and walkthrough that's going to really show you how you should work each of the forms that we provide, and really try to give you some places where you can tick and tie. Line 9 should equal line 18, or line 3 should equal line 4. So that's where you can try to catch imbalances and catch problems before you submit and find them. The manual is available on our AOS FTP site. You can also, it was uploaded to your county's folder. It's also available on the AOS website. As well with the manual, you can also find all forms should be available on the AOS FTP site. If you're not finding it there, I've already received some emails when people are having issues. Feel free to reach out to me, ask Janie, and we'll make sure to get them to you. The final item on the overview for settlement is once you submit your settlement, you should receive an acknowledgement from Crow that you've received within 24 hours that your settlement has been received. If you've submitted your settlement and you have not received a notification from us or Crow, please reach out to somebody. There could be some reason where we did not receive the notification we thought we were going to receive, and we didn't realize you had your upload. And I just don't want someone to slip through the cracks and us contacting and calling you in late June saying, "Where's your settlement?" and find out we've had it the whole time. When you're reviewing your June settlement, I highly recommend making sure to complete your checklist as you've done in prior years. The checklist will walk through all the balancing kind of I was talking earlier, and that goes through the manual and make sure that certain lines check, certain lines balance. I'm not going to walk through that today. You have the checklist, but if you have any questions, feel free to let me know. There were no changes from that from your last December or last June, so I didn't want to spend too much time going over the minor details. As I stated earlier, Crow will be conducting their review again. And once Crow conducts and finalizes their review, they'll send a copy of your settlement to me, and that's when we'll kind of complete our final review. Once you get the final review and the final pre-approval from AOS, I will send you an email and let you know that your settlement's been pre-approved, and then you'll receive your final approval once we receive our e-signature document and all excise fees have been submitted. I just want to also reiterate with bold and underline that we must receive all funds no later than Friday, June 29, 2018. That's not me being a stickler. That is just statute, and we just try to do our best to abide by statute. The other item that I did not have in here, a due date that is coming up soon, is that on June 1st, all fines and forfeitures by statute need to be remitted to the state as well. So if you haven't done that, you still got a week. But if we don't have them by the 1st, you should be getting emails from Janie here about every day. I told her to bug you. So if you don't want her bugging you, she's pretty terrifying. Get it done. One question that I haven't received too much about, but I just want to kind of touch really quick, was business personal property tax exemption. I guess before I joined AOS, this was a really hot topic. Missed a lot of that conversation. But one thing I just wanted to point out is that the legislation that did not pass this year that had our fix for the issue with the BPPE, it was in the DLGF bill, and as Dan Chackle talked about yesterday, that bill did not pass. We anticipate to have a legislative change occur in 2019. Until that time, just continue to keep this and use the same allocation, the same methods for this as you used last year. And hopefully next year we'll get this all cleaned up with the 19 bill. So the next part I wanted to go into, I just wanted to do a quick overview of all the forms. And by quick overview, I was just going to state this is the form, this is what it's used for, maybe a little tidbit, and move on. I don't want to get into the nuts and bolts of each line. Yet again, I don't think we need to go line by line. If people want classes or want time to go over by line on line, I think we can create smaller workshops, which I think would be more advantageous when everyone has a laptop and everyone can go through examples and we can go through that together. But today, I just wanted to do the high-level kind of overview. There are a total of 7 forms that you should receive. You have your Form 102, Form 105, 17C, 49TC, Quiotus, Exercise Tax Allocation, and Excise Recon. So I'm going to just go form with form and just kind of give a slight piece of information for each one. And the first one that you have here is your County Form 102. Your County Form 102 is your taxing district-based apportionment sheet. So it just kind of looks at the total funds available for apportionment of each individual taxing district. So for every taxing district you should have a Form 102. And it's really broken up into 2 main sections. Here you kind of see just a little highlight of Section A, and you also have a Section B, which is the fund level information. So Section A is the overview for the taxing district. Section B is the fund level information. And then you have your your Form 102s, which flow into your Form 105. And your Form 105 is kind of your county-wide view of the Form 102s. And just like the Form 102s, you have two sections. You have your Section A, which is the overview of all the taxing districts, and you have Section B, which is kind of the more fund level information. The 105 does consist of a third section, which is your total fees that are calculated that need to be remitted to the state. Yet again, they need to be remitted by the end of June. The one thing I just noticed that I forgot to mention on the 105 Section B is that when you come to your total, your line 9 should always equal your Section A total. So the next form is your 17TC. This is your certificate of certificate of county auditor of tax refund claims. Most counties, I don't believe, do these in the spring. Is that correct?
True.
Yes, that
But
is
they
true.
can't.
They can, but most counties only submit this in December. See, I'm still learning as well, being only a few months in the job. But here, when you see this form, this is an Excel spreadsheet, and you tend to have 2 sections of the form. You have your county summary and your taxing district summary. Your county summary is just as it sounds. It's your summary of all your taxing districts, which totals up to all your refunds. And then your taxing district detail is the detail by taxing district, and you tend to get much more detail that you see here, whereas the one only shows districts. The district detail actually breaks it down by taxpayers. Then you have the really large sheet, which is your 49TC, and this is the worksheet that's used to reconcile the differences between the treasurer and the auditor. So this form needs to be filled out both by the auditor and the treasurer, and there are certain sections of the form that is due from the treasurer and certain sections that are due from the auditor. The first thing you'll see is, I just want to kind of go over the treasurer's portion. You'll see lines 1 through 4, or columns 1 through 4 and column 13. Those sections of this 49TC is set to reflect the treasurer's cash book. It's used to calculate up to the want to make sure I say this right. It's total taxes, right? Yeah, it's used to calculate the total apportionment, and then it balances to the auditors with the auditor's side. The other thing that's listed is there is a total list of other collections in the 49TC. That's kind of on the bottom of the workbook, and it's just a list of the other collections and different fees that do come in. Then we also have the auditors portion of the 49TC, which the auditors are all you guys. You are set to fill out columns 5 through 12, and the columns 5 through 12 usually need to reconcile to the columns filled out by what the treasurer is filling out. If there is a situation, which I believe normally occurs, it does not reconcile, that is when you have to go to our quietus, I can never say that, worksheet. The quietus worksheet is broken up into multiple different sections. You have a summary, property tax, excise tax, additional property tax, treasurer's cash, and additional quietus kind of tabs on the worksheet. The summary is what it sounds like. The summary is just a summary of the three totals from the different of three of the different tabs, and it just comes to a total transfer, quietus transfer. And this sheet, when you're filling out your settlement forms, you shouldn't have to put anything on this sheet because this sheet just pulls in from the other pages. Next, on the property tax and excise allocation, this is just used to reconcile and advances or record fees out of the distribution. So you'll just see here that you kind of start with your gross property tax distribution, then you back out any advances, back out any fees to come to the total property tax distribution. Kind of the same thing with the excise tax. As I said, we're going to move a little quickly through this. Then you have your additional property tax quietus. This is just used to do a quietus for any funds that were collected into the property tax fund that needs to be moved to a different fund. As you see here, it's just kind of examples of specific types and where it could need to be moved. And Janie, stop me if I'm saying anything that's incorrect.
No, so far so good.
Okay, good.
But
I say feel free to interject.
well, one of the things you also see down there's an area called free, because we can't determine or know what other things you may have out there that's specific to your county. So feel free to use those. They're fillable, they're not protected, I hope, and you should be able to add anything in there, and you'll see that on several of these. I just wanted to point that out, just in case it wasn't obvious.
Thanks, Jane.
You got it.
So there's the property tax, and then you have the additional quietus. These are just represent fees collected by the treasurer's office that will need to be allocated to a separate fund. So it's similar to the property tax, but it's just for additional fees. Then we just kind of have the last two sections, which was excise tax allocation and excise tax reconciliation. The excise tax allocation worksheet is the worksheet that we provide to help you to calculate your property, the excise that needs to be remitted to the state. No changes from last year. There's a little drop-down menu. You can select your county, enter in your amounts by taxing district, and then it goes through the whole calculation and gives you the amounts that you need to send out. Then the excise tax reconciliation, that's the workbook that we give you to reconcile from the treasurer's excise tax to the auditor's cash book. So that was everything I had. And the last section I had was just, I was going to do a question and answer, but yet again, when I saw the size of the room, I wasn't sure if a question and answer would really work well, having people trying to scream from different corners. But Janie just wanted to have a few things she wanted to add.
I thought it would be kind of fun to go back, and this was a picture that I used 5 years ago on a presentation. I just thought it was cute, because I used to have a Westie, and I just love that. And I was going to actually, but I'm too short and the podium's too tall, was going to sit like this. So, and then I thought, okay, how can I start out? And obviously, for those people that know me, know that I don't have a problem standing up here talking. I am a talker. I don't embarrass easily. But I have to say, last spring's conference, when those of you that know me applauded, I felt quite humbled. And I just want you to know how much that touched my heart and how much I appreciated it. And I get teased about it at the office all the time. So thank you all, and I'm glad I've made friends with so many of you, familiar faces, and even with some of the vendors used to work in the county auditor's office. I came from a county auditor's office. For those of you that don't know, I feel your pain, but you know, we're all in here together. We all try to do the best job that we can with what we've got. And we are always in the auditor's office open to, what was it one of my teachers used to say, questions, comments, gripes, or concerns. Feel free to contact us. If we can fix it, we will fix it. So just a few little things that have come up and I'd like to bring to some people's attention, well, everybody's attention. These are just some simple little things that happen, not the end of the world, just a little reminder that when you are remitting money to the state, it's not necessarily to our office. The one that comes to mind are the examination of records. And because we've moved into the 21st century and now we have payments electronically, if that comes to the auditor's account and shouldn't be, and it should be going for the State Board of Accounts, it's a lot of extra work moving all this around. Once again, not the end of the world, but watch that because we get that pretty frequently. And it's not unsurmountable, but we can fix it. But just appreciate, please watch that. We actually received a check the other day from a county for fines and forfeitures, and it actually said state of Indiana, and then it went to a correctional facility. So it took it a while to get back to us. So appreciate that. Another question I get a lot are on, I don't have my aircraft reports. I don't have my watercraft reports. We at the auditor's office used to, for those of you that have been around, know that we used to work with that distribution, those distributions. We didn't do the reports, but I have a list. I'll be happy to provide if you are missing reports or have a question on a report. Most of you know for the BMV, Tamitha Cooper is the supervisor in that. You can contact her. She will have somebody in her staff get you those reports or deal with questions you have. And I know on our notification, we put her email, so that can help. Now, the auto rental and the aircraft reports come from the Department of Revenue. And they have specific emails we can use. I didn't do a slide because these were all notes I was making as I was sitting back in the back. But happy, and Beth, I wrote down the one for the aircraft, so Beth Myers, wherever you are, I have that written down for you, okay? Let's see. Oh, this is a biggie. Because at this time of the year, not only are we going to start receiving your excise tax allocation money that comes to the state, we're also receiving a whole lot of money from the clerks of the courts. It is so helpful if you can provide documentation. I realize, you've done your settlement, and you've got your excise tax allocation worksheets. It's in a whole other file. So if you can provide that when you are processing your ACH and provide it, PDF is great. If not, the Excel sheet's fine. It just saves a lot of time. That way it's easier to verify. And all I'm saying basically is I'd really appreciate it. So thank you. You guys are doing a great job on that, but about every week I have a couple of counties I've got to reach out to and say, hey, girlfriend, I don't have my information. I don't know what this money's for. And we have to have documentation because we get audited. Let's see. Bob mentioned about the money being in by the 29th. We have a deposit process that we have to do to record that. So even though I can't get on to you if you don't have it in there by the 29th, but the sooner the better. If you can try to have it in, the sooner the better, just easier for all of us. And let's see, I just got an email from the federal level asking for those counties that receive Hoosier National Forest money. Gentleman from the federal level has asked for some information. I may be reaching out to you soon. They're asking what you're using the money for. So you may be hearing from me real soon on that. And last but not least, I would also like to say from all of us in the local government division, we've been through a lot of changes in the last year or so. And we all appreciate how patient you've been and how responsive you've been, because we know we all have a lot of work to do. We're all in this together, and just honestly want to say how much we appreciate your attention to detail, all of the hard work that you put in, and your willingness to put up with us. Bob has been a blessing. As you can tell, he's knowledgeable, he's funny, and he's more than happy to help you with anything, especially some of that high detail stuff that he knows. And also, Miss Courtney is back in the back there. She is our big kahuna, and we have a lot of fun working with her. And just wanted to say thank you to you all for all that you do. And that's all Gabby Me, has to say.
And for the record, that got us to 1 hour, which is what I thought we needed.
Hi, Kathy.
First of all, I wanted to say that there had been a lot of changes at the Auditor of State's office. You know, we lost Dan. We all cried about that, and Brenda Allier, and just other ones that we've worked with for a long time. But because you stayed, you were there. We knew you. It was a comfort level, and you've done a great job. We all just love you so much. That is absolutely true. But one of the things that you do the best that just makes everything wonderful is that sheet that you put out with everybody's phone numbers on it. And I know that doesn't sound like much, but I use it to where I had to make several copies of it in the beginning because I know I'll wear them out. So I appreciate that. And you need to give a raise for making those, because that saves all of us a lot of time when we go to figure out what we're doing. So thank you very much.
Well, you're welcome. And I will tell you that at the state level, you see turnover. And I know right now, the list that I've got, there are a couple of people on there that I know, and I don't always know this until somebody tries to call someone and, oh, that person's not there anymore. We try to keep it up to date. So Kathy, are you saying you think it'd be helpful if we send that out again? Oh, online?
If we call somebody, so if we say we called somebody and they're not there anymore, and they say, "Oh, I'm sorry, they don't work there anymore." I'm not really sure who does that. Then we could get on your Auditor of State website and see the current one, and you can change it, and then you wouldn't have to send it out to any of us. We could see it.
Yeah. Well,
But-
I do know, and I don't know where it is right now. Courtney might know. We just updated the Auditor of State website, and there's a link on the local government division. I can't hear at the bottom.
It's on the bottom of the local government division page. So
Okay,
if
so we
you,
do have a link.
there is a link.
Of the
So
most-
if you log into in.gov/AOS, on the left side, there's a department. If you go to local government division, the link will be there.
Thank you, because that is very, very helpful. And it's the only place across the whole state I know where there's one list. And it means a lot to me. It really helps.
Okay.
That's great. In that list, actually, they're all the financial people that are on that list. So that may not be the person that can answer the question, but they'll get it to the right person. Anything else? Bob told me I had to answer questions. Usually I try to make other people do that.
I said get into the weeds on the forms. That's too much for me. That's Jani's been around for a long time.
Yeah, continue to buy stock in hair color. Okay, thanks very much, y'all.